Hey traders, happy Monday everybody. Hope everyone had a great weekend. All right, we're getting ready for the post Friday options expiration session. So things basically get back to normal, if you will, right? The whole idea behind Friday's OPEX was that there were going to be certain moves that were highly probable towards certain strikes that had a lot of open interest. And that's exactly what we did on Friday. So we had 5 setups, 4 of which did trigger. So let's walk through what we did have. We had GLW, by the way, which did not trigger. And I'll take a look at GLW later on today when we move on to our swing trading part of the morning. We'll see if maybe we still like that one or not. I did want to remind everybody for the first hour of our morning, we'll keep an eye on those 5-minute charts. We'll take a look at what day trade set up. We'll keep an eye on those swings as well. And if you're wondering, Rog, between 9:30 and 10:30, when you're really not swing trading, but you're focusing on those 5-minute time frames, you're focusing on those day trades, are you keeping an eye on the 1 hour and the daily? Oh, absolutely. What I'll do, you'll notice, is we'll make the 5-minute chart about half of the screen, and then we'll make the weekly and the daily a smaller sliver so we can keep an eye on the levels. But I won't do any kind of management in terms of risk, stop losses, break-even stops, tighten stops until at least 9:45. Maybe 10:05, which is really my preference, to wait for the clearing range, the opening range to complete. And then I'll look at managing, because what looks like a giant candle on the open may not really be what we see in the next 25 to 30 minutes. I never want to get caught up in that crazy candle, that candle of unusual size at the open, right? So that's one thing. The second thing is, right now, with Schwab, Oklo, XLU, Joby, and Microsoft open, I'm going to keep an eye on those based on the stop losses that are in the alert. And again, unless I'm at 9:45 and we're pushing some limits, I'm not going to worry about it until 9:45. And for me, I won't really exit for most of the time until 10:05. If at 9:45 I'm way beyond 25%, for example, on the stop loss, I'll do it then. Now, why do we wait? Why do we wait before we get our first day trade? Why do we wait to manage risk? Because the opening candle is not necessarily indicative of what we're going to see, right? For the rest of the morning, or forget the rest of the day, even just for the rest of the morning. So what do we have right now? Well, actually right now, pre-market, NQ and ES are below the previous session close. YM and RTY are above the previous session close. So right away, one of the things that I want to be aware of is anytime the NASDAQ and the S&P, and this is a huge tip, idea, concept for those of you that like to trade the S&P, anytime the NQ and YM are going basically in opposite directions, kind of what we have this morning. They're not in alignment, right? Not in directional alignment. I think the most important thing is I will avoid the ES. I will avoid the S&P. It's not just the ES, it's any S&P. SPY, SPX, ES, MES, none of it. So if they're not moving together, YM and NQ, ES gets caught up in that tug of war on the morning. And I don't want to trade something that's caught up in a tug of war on the morning. All right, so then let's see what else we've got here. Bear with me. Let's take a peek at NQ here. Now, are we way below the previous session close here this morning? Not really, but the previous session close is up there at 23,796 3/4. As long as we're below that, there's going to be a little bit of heaviness. One of the things that I'll be looking for on the open, usually probably around 940, is are we still holding above this Darvis level here. Can we catch a bid at that level or not? When we come down to test 23,760, even 23,755 in this area, are buyers waiting there to support Microsoft? Well, that's something that's going to be pretty important because NQ and Microsoft, right? So you might say, wait a minute, Rock, support Microsoft? Yes, because we have that swing. Now, Microsoft pre-market looks better than the NASDAQ, and that can happen, right? The NASDAQ has 4 cylinders within it: XLK, XLC, XLY, and SMH. Microsoft is part of that XLK. So Microsoft could have a better, stronger open than the NAS itself. And so I'll be keeping an eye on not only that support level in the NASDAQ, but if the NASDAQ can bounce, Microsoft should be absolutely fine. I'll be keeping a close eye on Microsoft for a couple of reasons. Number one, today, 21st is dividend date. Now, that's not a real imminent problem. That's Thursday. I would love to see that Microsoft's already hit an initial target before then, but dividend date is Thursday. So that's where usually I'll look for a pullback of 2x the dividend, right? That's very often what we can see, but we do have some time going forward. And yes, the calendar is open today. So that does mean, and this can be a little tricky sometimes, that does mean that geopolitical chatter, we know that Russia, Ukraine is right back in the headlines. We know that tariff chatter, US, China, those are not going to happen on a schedule. Those are not going to be things that we can look at the calendar and say, okay, this is when we expect this information or this data or this speech. So this is going to make it a little difficult. And because the market participants have nothing else to look at in terms of high impact data, sometimes those headlines, those rumors, that quote unquote news can be a little bit more, volatile, right? Given nothing else to really look at. So here's our quick adjustment to more of a day trading mindset. I just moved the 1 hour and I moved the daily over to the right. And now I can keep an eye on those swings and those levels, but now I can also free up some bandwidth for any kind of day trade. Now, one of the challenges with whether I'm bearish on the NQ and ES, which I'm really not overwhelmingly so, or whether I'm bullish on the RTY or the Dow, one of the things that's going to be a challenge here is that we do not have a trend. So that's number one. We do not have a trend. It's neutral momentum, neutral trend. And in order to get down to the hourly price movement range down in here, I will have to move below the previous session close. Now, the last couple of weeks, we've been talking a lot about the PSC and how it is a line in the sand because the sentiment above and below that can be drastically different. I think a lot of folks have realized, wow, Rog, the best kind of buy as a day trader is above the previous session close, while the best type of short is below. Agreed. So when we're seeing the previous session close right in here, basically cut that zone in half, the edge that we have in terms of clarity, in terms of directional bias is far, far less. Now, is anything clearly above the previous session close or clearly below it in a way that's useful? Yeah, maybe Bitcoin, actually. Maybe Bitcoin. And Bitcoin continues to struggle, gang. This is BTC futures. So you'll see here, this is really what we're looking for ideal alignment. Previous session close, and then we see just below that, that's what we're looking for, because this is going to be selling pressure. This keeps us in the bearish sentiment hemisphere, if you will, right? And we have our resistance zone below that level. Now, the same would be true if the previous session close and the hourly price movement range were structured like this. This is ideal. So my previous session close is below the hourly price movement range. That's ideal. The same would apply to a Darvis, for sure. The same would apply even to a mean reversion and the wave, right? So that's going to be what would be ideal. Yes. All right. So moving then on to, and just in the opening moments, I'm going to wait at least 5 minutes. Let the first candle, that can be kind of crazy, happen. And let's just take a quick peek at the open swings. Now, Schwab was open before OPEX, and there was no reason to cut it because we've already entered and scaled out. And now we're looking to see if there's a T2. So Schwab, as long as Schwab, for those of you that have Schwab, the long calls, as long as it stays above the price at which you've entered minus 5 cents. So for example, I bought the 92 and a half calls at $4.60. As long as those 92 and a half calls are at 460 to 455, 455 is my stop. So as long as it's above 455, I'm not going to worry about it, right? We've already paid ourselves. And now I want to put in that stop loss that protects my capital. So I'm risking unrealized profit, but that's it, not my capital. All right. So the next one was OKLO. This was from Friday. So just a quick review. And then I'm just letting the first 5 minutes go by before I even think about a day trade. So OKLO moving higher off the lows from Friday. Awesome. No problem. No problem. In terms of what it is that I'm looking for in the movement higher. Now it's going to be look at that candle of unusual size. That's what I'm talking about. So when you take a look at those September 1970 calls, know what you paid for them. I paid $8.15. Yeah, these are a little spendy for two reasons. One, Oklo is kind of just a spendy option anyway. And two, we have 32 days to expiration, which makes it a little bit more on the expensive side because of time. So when you look at those 70 calls, right now they're trading, the last trade was $8.10. I'm down a nickel from what I paid. So there's nothing really in any way to fuss about there. XLU. So these are the 19 September 83s. And again, what I'm looking for is where do we sit at the moment in terms of where those 83 calls are, and those 19 September 83s are at 365. So I'm up about 40 cents per contract there. All right, we have a position in JOBY, which was kind of heavy into the close. It always concerns me a little bit. Taking a look at the JOBY. Again, I'm never, ever going to be expecting a bounce right from the level that I bought an option from, right? So there's a little bit of unrealized loss. That's heat. It's a manageable amount of unrealized loss. And right now, if I take a look at the 17s, I'm not thrilled about what they're doing, but it's not a problem. So one of the things we do in this room, and I know a lot of you already know this, but let's go through it together, is we always want to make sure we crunch our numbers, know our numbers. That's so important. So if I know I paid $1.75 for something, I know as long as this thing is trading above the stop loss, I'm not going to worry about it. And as long as this thing come 9:45 to 10:05 is back above basically 126, I'm going to be fine, right? If it doesn't survive, the biggest mistake traders make in any kind of trading is simply not taking a small loss. They'll add to it, they'll roll it, they'll do all sorts of justification to lower the cost basis. But remember, at the same time, you're increasing, right? At the same time, you're increasing the overall. And yeah, sorry, that was 15%, right? So I was just using our 25, for example. Yeah, Joby was 15. So that thing's got to be above. Let me recalculate that. Luckily, I place alerts for everything. So basically, this thing's got to be above basically 143. So in the next 11 minutes, I want to see, ideally in the next 11 minutes, it's above 143. If it's above 143 by 10:05, I'm not going to worry about it. 9:45 is going to be the first time I even take a look. So yes, the stop loss levels are in the alerts. I was just using our normal 25, but yes, JOBY is 15%, correct. All right, moving on then to the last fill of the day, which I know a lot of you got right at the end of the day, was Microsoft, right? So we knew what our trigger was, and I bought the 29 August, but the 22 August was also valid because this is a spendy one, like OKLO. Right now, the MSFT trade, Again, make sure you check which expiration you bought. You can see when I give you all a choice, I'll get specific about what I bought. And if there's a choice, I will usually buy the further out call. Right now, the 520s are trading at, let's see, 820. So I'm down about 55 cents, which is no big deal, right? So that's where we're going to look for. I'm going to double check my fill on that because I would think I'd be up a little bit on that. Oh, let me double check my fill. That's weird. Anyway, I'll double check my fill in case I fat fingered something. All right, so that's where we sit here this morning. Let me write that down. Check MSFT fill price. Okay. So moving on to our morning. So it's not even 9:40 yet, and it took us about 5 minutes to get through. Just a quick recap of the swings, right? So I don't want to take more than about 5 minutes to do that because now I can switch on over to the day trades. It does look like all four, so really interesting now. What a difference just 5 minutes makes, right? All four indices are above the previous session close. That means all four of them now are moving in the bullish hemisphere intraday. Let's see if they stay up there, but breaking that level after the bell is a lot more powerful than had it broken the level before the bell. So once we pierced it, there's a higher probability that even if it comes back down below, it'll find some strength. Now, as it's breaking the previous session close, I'm going to look at a few things. And that means I'm going to scan for one or more of the three core setups, right? It's just three core setups we're looking for. Really simple. We don't want 33 setups. We don't want, just a ton of things to have to look at. We want to have it automated, preferably. And we want to have those zones super clear on our chart. So either I'm going to sink into the hourly price movement range of the red or green zone. I'm going to have a wave if there's a trend. If there's no trend, no wave. And the last one is a Darvis. So I'm looking for the Darvis in terms of setups. Those are our three core setups. And if it's not doing one of those three things, I'm going to move on, right? That's probably the hardest thing for traders to do, right? That's probably one of the hardest things for traders to do. Say, hey, there's nothing here. The size of the candle, the speed of the candle, all that stuff really is just noise in relation to whether or not we're seeing one of our setups. And that discipline to the setup is probably one of the most difficult things for traders to do. So, everyone here can do something very simple. Maybe you have a setup of your own, right? Maybe you have a setup that you've come into the sector sequence mastery and there were other setups that you were looking at. You're going to find that a lot of times those core setups are going to overlap other things that you've learned. And so now it's not ever a process of just becoming a trader like me. It's about seeing what I share with you and then mesh that with the things you're doing. So let's say you're a momentum trader and you want to do it better. You're going to find the Darvis is a great pre-momentum setup. You're not only going to get a better fill than had you been waiting for the momentum burst, you're going to have a better risk reward. So you're going to have a better way to put on a Momo. Maybe you're a trend follower, but you've been buying into new highs, right? I'm going to teach you how to buy dips. That's hourly price movement range. That's the wave. So just about every setup really is what kind of structure are we in? Structure dictates strategy. And whether you want to call those setups or strategies, it's kind of the same thing. Hourly price movement, wave, Darvis are the strategies with which I'll use to enter the market. So that's what we've got here as we kick off the morning. And as we cruise through the indices and what else? So cruise through the indices and taking a look at what might be leading the charge. Looks like it's mostly the NASDAQ. And XLK and XLC. No, sorry, XLK and SMH are the two strongest sectors in the NQ this morning. So that's XLK and XLC. XLK being strong is great for our Microsoft trade, right? And XLC being strong, sorry, SMH being strong, SMH means we might look at things like NVIDIA or Taiwan Semi or AVGO for a day trade. So the two stronger sectors right now, basically at 940, are those two. Is anything else strong this morning aside from that? Yes, here at 940, we also have metals and mining quite strong, GDX quite strong. And remember, GDX and metals and mining have been two of the strongest sectors amongst all sectors so far this month. So it's not surprising to me that metals and mining and gold miners continue to climb higher. And yeah, maybe we'll have a day trade in XME or one of the stocks within it. But if I'm looking for strength, let's see, XME. Am I looking at the wrong? Oh, I'm looking at my daily. Sorry, gang. I'm looking at the daily, not the intraday. Sorry. It's not incorrect in terms of the daily. It's incorrect in terms of intraday. So let me pull this up. That's screen number 2 if you're in the room right now. So my strongest sectors, let's do this again. 2 strongest sectors, I'm looking over at this other screen, are... Yeah, XLK and SMH are pretty strong, but I take that back. These are daily. XLK and I don't know what I'm obsessed with XL. So they're the strongest within the NASDAQ. That is still true. That is still true, but it's just bullish. They do not have an uptrend. In terms of other sectors to watch, we'll keep an eye here on XLU. Well, that serves us just fine, right? Because we have that long position in XLU. We have that long position in OKLO. So that being strong here this morning suits me right down to the ground. And those are our 3 strongest sectors. And, a lot of what we wanted to set up, not just for day trades, but for swing trades, is finding things that have the probability of follow through. Now, OKLO may not be getting the memo, right? OKLO may just not be getting the memo, but XLU seems fine. Here's the most important thing as we go through the rest of the morning. If I don't cut the things that are not doing what I need them to do within an allowable amount of percentage, within an allowable amount of wiggle, I've got to cut them, right? I've got to cut them. And I know for a lot of traders, they never like to take a loss because they're obsessed with win rates. And remember, a win rate is only as useful as understanding the size of the average gain to the average loss. So if they're equal, no good, right? I mean, with a decent enough win rate, yeah, you could gain, but really your losses should be half the size of your average winner. So if my typical winner at a T1 is 35 to 50%, I really don't want to risk more than 15 to 25. That's sort of a generalization, but that's the mindset, right? Whether it's day trading or whether it's swing trading. All right, so let's